Hindu editorial, which is related to our current account deficit. Basically, what is happening right now, the trade deficit is getting deepened day by day. So there is a mismatch between the exports, what we do from India, and imports. So we will try to read that what is happening in the sector of import exports and how it will impact our current account deficit. So it is trade worries. Already we know that there are a lot of things which are impacting trades, and that is what our like topic for like that India should be worried about. Expanding trade and current account expanding trade and current account deficits. What is this? Okay, it is like a heading, I think. The burgeoning trade deficit is set to swell the current account deficit. Okay, we can say that the growing trade deficit right now, it is going to swell the current account deficit also. So right now, what we can say that if something happens, the next incidents will be also connected to that. So if there is a trade deficit, it is very clear that current account deficit will also come. So we can jump to the paragraph. Okay. July's provisional trade data should trigger early warning signals among policymakers. So right now, last month it was July, and it showed the provisional data, like temporary data, that it is a warning signal for the policymaker, the people who are basically think tank of India, who create a lot of policies for us. So the trade data which has been shown in the July is going to be very problematic for the among the policy makers, as the first year-on-year contraction in exports in 17 months. Like there is year-on-year contraction. Last year also there was contraction in the exports, and this year also there is contraction in this exports. And like last 17 months it is happening. So albeit marginal, it is very less. Like the export deficit is very less, and 44% jump in the imports. Yeah, and we are importing a lot of things right now. So import is increasing and export is decreasing. That's here, sharply widening the trade deficit to third successive monthly record. Okay, so from last 3 months we are recording this thing like it is happening to our country. The trade deficit is widening month by month, and that is going to create a lot of problems for the traders, especially for the economy, for our economy, because there should be balance between exports and import. And if one of the pillar get damaged, then there will be disbalance, and some sector, people of some sector will be like got threatened by it, like the threatened by the deficit which is happening in the system. We can jump to the next paragraph. The export performance is of concern. Okay, the export performance is really a concern for us, and how it is confirmed, reflecting a slowdown in overseas demand for Indian merchandise. So what is happening that right now we know that we export our every merchandise and items to the in outside country from India. Like we export it to other countries, but there should be also rising demand in the market, outside market, foreign market. Then only we can export our items. But here we see that there is no demand. Like demand have been slowed down, maybe because of some reasons. The competitive advantage gained by the rupee's sizeable depreciations against the US dollar notwithstanding. Even our rupee, like rupee had depreciated right now, and this has also added to the woes to the export items, because as the rupee will depreciate, the import and export will also get affected, because everything is connected with the currency. So we all know that dollar is a highly liquidated money. It is available all over the world. So our money is also depreciating. Our exports, like there are various reasons given here why trade deficit has been increasing. So rupee downfall is also a very valid reason why why our export trade deficit has been increasing. We can jump to the next paragraph. While the Commerce Ministry has sought to explain away The 0.8% slide in the last month's exports are largely being result of inflation control curbs. Okay, so our commerce ministry has seeked to explain away the 0%, 0.8% slide in the last month exports. So here the common like commerce ministry is explaining that what could be the cause of this slide in market exports. So they are saying that the inflation control curbs, for example, we have learned about the RBI has made some changes in their CRR and RR rates. So because of that also, and we have also taken some measures to like applied some taxes over the exports, so the items could be available in the domestic markets. So as the commerce ministry has said, the basic reason behind is that we have made some policies, we have some rules, we have had some rule and we have some policies last month, and because of that this is happening. But ministry's preliminary disag- disaggregated data suggests several key sectors, including engineering goods, gems, jewelry, garments and yarn, and textiles, and drugs and pharmaceuticals, which were mostly outside the purview of those measures, also suffered contraction. Okay, so as the ministry has explained about it, like it may be reason because of the policies we made, but some of the items didn't came under these policies of the government of like to curb the export and to under the CRR. So these items, like some of the items which are given jewelry and all, have also seen a downfall in export. So these were outside of the purview of government policies. How does it happen that these items are also having like less demand in the outside market? So Commerce Ministry is not 100% correct about it. Like they have shown some shady, like really some shady explanation about it. So we can jump to the next paragraph. And viewed on a sequential basis, the slide in exports from the June level is disconcerting. Uh, it is about the slide in export. Like I think that in last month, in the June level, it might be about 100% export. Then we have decreased by 12.2% export, especially in engineering goods, which is more than 26%, represented the largest share of merchandise shipped overseas in July. So we engineering goods is about 26% of whatever we export in outside country. It has also contracted 2.5. Exports of these engineering goods has also contracted 2.5% from the last year, and it is also shrinking by 2.9% on monthly basis. So all around, we are saying that export has been decreasing in all sectors. And the June data was from June data, this month data, July data has been export data has been decreased whooply like whooping 12.2%. So we can jump to the next paragraph. Even granting the government's introduction in the late May of a stiff export tax on a range of steel products with a view of boosting the domestic availability and cooling price gains. Okay, so here it is written about in late May we came up with some of the taxes on the export. So the domestic demand could be fulfilled and the price gain of the items. For example, if we will go to market to buy you can say a steel cup. So maybe because of the inflation, the cup price would be 100 rupees. But after these some of the stiff taxes on the export, the price could be decreased because now there is a very small market for those items to be sold. And if the guys try to sold that cup in the outside market, he have to pay some extra taxes. So that's why he have to decrease the price of that cup in the domestic market also. So from 100 rupees it could be decreased to 90 rupees. So it could be available, and the price high price inflated price could be curbed. So here it is explaining that government has introduced some taxes around it, and it was likely to have constrained exports of this segment of engineering goods. Oh, so here it is written that this is also very problematic because it may have impacted the export of these items, especially the engineering goods. The condition of the broad category points to a clear slowdown in demand in advanced economy. So there is contraction also. You can say like negative growth of these items has is like clearly show that there is very less demand in the outside market, especially in the advanced economies, basically the Western countries here we can take. So we can jump to the next paragraph. The latest S&P Global PMI data from the US and the Eurozone of economic activity in July is also far from reassuring. Okay, so here two companies name of two companies are being given. It is S&P. Oh, sorry, one company name is given S&P Global. S&P Global is a credit rating agency. So these companies, what they do, like CRISIL and S&P, they try to forecast about what will happen in future, like how the trade will happen, how the is going on in the companies. And the PMI data is a data which is collected from 500 like top companies of some country, and that in that country the PMI data is collected from the CEOs and the people who are on larger post of those companies, and they try to tell about what is going on in their company. So do they have enough raw materials for manufacturing? Are there is market demand, is there any demand in the outside market? So according to that, PMI data is collected. So basically, they forecast about the market, what will happen in the future. So it has been clearly shown that US and Eurozone for economic activity in July is also far from reassuring. So it seems that there is no any positive news came from these credit agencies, the PMI data. So it is clearly shown that there will be no huge demand of Indian merchandise in upcoming time also. So we can jump to the next paragraph. As per the PMI data, output across Europe's major economies sharing the euro as common currency shrank for the first time since February 2021. Okay. According to PMI data, like all to the Europe, like the countries which use euro as their currencies, so they have shown that the market is really declining, and it is happening since last February, like last from the first time since last February. So we all know that before the February 2021, it was a period of Corona time, so every country was in depression. But later on, Europe has came up with some ideas. Western countries has also started their trade and all. But right now, the condition is very severe. It is because maybe you can say because of the Europe is highly dependent on Russian crude oil. So maybe the prices of the crude oil has impacted that thing. So recession could come in these countries also, and because of that, the euro has a common currency shrank for the first. Yeah, euro has also shrunk because of that since last February 2020. As a worsening manufacturing downturn combined with a slowdown in service sector to drag a composite index into contraction territory. So we can see the negative growth is just going to come in the European Union and the whole economy who uses euro. Why it is happening? It is happening because the demand, like manufacturing sectors, are also getting hard time, and with the manufacturing sector, the service sector is also in less demand. So basically, we know that euro is famous for giving services. Take the example of Britain. So UK is the like the what we can say the economy of UK is highly dependent on the service sector. So service sector is something which doesn't get influenced because of the market sentiments. But here we are seeing some adverse effects, and because of that, while the manufacturing sector is also in the pressure, the service sector is also getting influenced by it, and there is also depression, according to the paragraph. So we can jump to the next paragraph. US economy. The US economy, which has now contracted for two successive quarters, putting it on the edge of a recession, saw manufacturing PMI post its lowest reading in 2 years as output and new orders decline in July. So right now, what happened? In first quarter, the data, like the economy of the US has fallen to 1.6%. Only 1.64% was there, and in the quarter, the data, like it shows the recession is there or not. It is 0.9%. So we can see the economy of US is declining day by day, and the PMI data, which I recently I explained you, is the lowest in the 2 year reading. So there is the companies, the PMI data is showing there will be very less output from the company, and the new orders are also not available for the market for from the market. So what is going to happening? The US is also going to fall in the lap of recession in upcoming time. So both economies, like European economy and the US economy, is falling. That may be driving some like contraction in India. So we can jump to the next paragraph. Okay. Given that the US and Eurozone combined consumed almost a third of India's good exports in last fiscal year, the prospect of July's export slowdown deepening deepening as demand in these market weakens appears increasingly more likely. Okay. So here it is written about the it is the data about what item, like what percentage of item we export to these countries. So about 33% of the item which whatever we produce in India is exported to these Western countries. 33%. That is a huge percentage that we export in these countries. And as per like slowdown deepening, like the export is deepening because the demand in these markets also weakens. And as I told you, it is practically because of the rising prices of crude oil in these countries. So these are the main reasons behind it. The people are not consuming the item which are being exported from India because they are trying to save their money as much they can. In recession, what do? You try to save as much money as you can. You will not buy a new TV. You will say that I can utilize my mobile phone for getting information and all. So people try to save their money, and saving money derives the export. Like they will not buy anything. So any country which want to export their product, so they won't buy it. So that will also put pressure on the export market, such as India. We can jump to the next paragraph. Import continued. Imports continued to expand at a robust clip, driven largely by the expanding domestic demand for the essentials including crude oil, coal, edible oils, and electronic items. Coal and coke alone exceeded 5.1 billion. Okay. As while we started the editorial, I told you about the trade deficit. What is trade deficit? It is a disbalance between the export we do and the import we do from in and out of our country. So export, we already know that export has declined drastically. Here now the information of imports are also been given. So we are importing a lot of items from the outside. So if there is no balance between export and import, so there will be definitely a trade deficit situation in the country. So what is happening here? It is the information is given about imports, what we do from the other countries. So the domestic demand for essentials like crude oil, coal, and edibles oils has really increased. So this is already putting pressure on the imports. Like we have to import these things because it is essential. Without oil, crude oil, we cannot run our economy. With edible oils, our system can't work. Like we cannot cook anything and we can get food. Coal is also very vital because we have to produce electricity, and 60% of the electricity is dependent on the thermal power energy sources. So here it is a good information given about the imports. This is also putting pressure on the trade deficit. Like the gap is getting deepen and deepen because of that. Coal and coke alone exceeded 5.1 billion. Oh my God. So coal has also exceeded, like the only coal exports are about 5.1 billion. That is huge. That amount is very huge. Like we are highly dependent on outside. It is showing that imports are getting increasing day by day, and exports are decreasing day by day. So there won't be any kind of balance between these two. So it is definitely trade deficit is going to happen. We can check the next paragraph. The augury from the trade data is that the increasing external increasing vulnerability as the burgeoning trade deficit is set to swell the current account deficit. So it is written about the augury means like something that should be forecast like from future data. The augury from the trade data is that the external sector faces increasing vulnerability. So external sectors, for example, steel we can take the items which we export, the clothes we can take the clothes and the clothes and belts and all. So these items are having great pressure because of this, as the burgeoning trade deficit is set to swell the current account deficit. So, as you know that the growing trade deficit is also going to impact the current account deficit. So, we can know as the starting of the article I told you that how these things work. Everything is connected to each other. So, if trade deficit is going to increase, our current account deficit will also increase. And that is the data which shows that how your economy is performing, and on the basis of that a person can calculate what is going to happen in future. Could there will be a time period of recession or something like that. So current account deficit will be also in a decline mode in upcoming time, adding pressure on the rupee at the time when portfolio investment from overseas has been negative. Okay, so trade deficit will also impact the depreciation of rupee. Because of that, the people from the foreign countries will try to take out their money from India, like whatever they're investing there. Or otherwise, the people who want to invest in India will refrain from investing because they will be aware of the situation that what is happening. The current account deficit in India is going to like very high. So because of that, it will not a good place for an investment. And foreign direct investment has been significantly weaker. As I told you, the FDI has also been weakening day by day. So basically, the article says that the trade deficit will impact the every single sector of our country. So we have to maintain the gap between the export and imports, because on the basis of that, every deal is done from our country. The foreign investor will be attracted if we maintain our trade deficit, and it should be changed to trade surplus in upcoming time. So it is a really painful task for our policymakers what kind of new policies they come up with. So this is all about the article, and now if anybody have any doubt, they can ask about it.
Yes, I would like to ask you one question, which is, what do you mean by trade deficit? You are saying imbalancement, or something else?
Okay, I will tell you. Trade deficit is difference between the total export and import. Basically, when our export is more than our import, the items the visible items like goods we export to in other countries. So when the export is less than the imports, what we do, then the situation will be called termed as trade deficit.
No, 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 no. When export is more and import is less, then it. Okay, yeah, yeah. Then export. Okay, I got confused.
Vice
Sorry, sorry,
versa
sorry. I
can
got
happen.
confused. Yes, yes.
Any other questions? Okay, I think then the editorial is clear to all the people. I was capable of putting point to you. Tone of editorial, okay. So anybody want to tell me the tone of editorial? What could be the probable tone of the editorial?
Analytical.
Analytical. Anybody else?
Political, uh,
Yeah,
the
it's analytical.
informative also.
Leo, what is your point?
I said informative.
Informative. Anybody else who want to share some other thing?
For me also it is informative, and if it is analytical, then why? I don't know. So for
Obvious.
informative.
Okay. So as per we have read the article, we've seen that the information has been shared. There are multiple information has been shared, and that is a clear data which is not going to be going to be what we can say changed in upcoming time. So it is happening right now. So basically, the data has been taken from the last month, and that's why we can say that the article tone is informative because the information which has been shared is already available. So analytic means that you calculate everything and present it in front of the readers. So here the author is not calculating everything. It is just putting the information which already been given by the government and trying to predict it like what will happen in future. So we can say that the article is quite informative. So this was all for you people. So I wish that you people will join editorial session in the upcoming time also. Every day at the 11:15 this session is held, and if somebody misses the session, so they can watch the replay on the YouTube. So just you need to type YouTube or link in the chat, and you will find the whole links related to editorial and all things. Thank you guys, and you can discuss some any other topic. So